Hi everyone, hope you're all doing well, and today we'll talk about Wetherspoons, which we haven't talked about on the channel for a while, and I had a few comments on Friday after Wetherspoons reported earnings and the stock went down 20%, so I'll kind of give my thoughts on the current situation with Wetherspoons and if I think it's a buy right now. So last time I did a video on Wetherspoons, it didn't actually do that well, so prove me wrong, make sure you smash that like button and we'll get stuck into Wetherspoons. So Wetherspoons, the ticker symbol for this one is JDW, and like I say, the stock went all the way down to 773 after reporting earnings. It has done a slight recover since the earnings, but still it has sold off quite a bit, and since it was pre-COVID levels, the stock was about 1,700 when on December. It's been on a little downtrend since then, but then obviously we've got the COVID dip, so the stock's still down about 50% from its all-time highs. So it was the earnings which was the main catalyst for Wetherspoons to go down. Obviously, another thing that hasn't helped Wetherspoons at the moment is that obviously because of the new lockdown restrictions, if there is a tier 3, I believe it is, then obviously a lot of the pubs have to close, which obviously isn't helping Wetherspoons. So it looks like it's still not out of the woods yet, because if it carries on, if the cases carry on going how it is, then unfortunately Wetherspoons is going to be one of the things that is going to get closed down. So it's not totally out of the woods yet for Wetherspoons. And obviously as well, you've kind of got the 10 p.m. curfew at the moment. So Wetherspoons was hit by a 105 million loss in the earnings report, and it actually hasn't had a loss. This is one of the big things that I do like about Wetherspoons. It has always been a profitable company. The last time it was unprofitable was in 1984 when it was founded, and also we saw sales drop 30%. Now, the chairman on the board, which is Tim Martin, was quite critical of the government in this earnings report. What he went on to say was about the confusion in the report with the government, and also what's disappointed me is that I wasn't in favour of a lockdown, but I completely went along with it, he said. But actions in the last couple of months appear to be jumping wildly from pillar to post without a strategy, based possibly on pollster views as to what the public might like, rather than on a proper long-term strategy that people and businesses can live with. Martin refused to rule out calling on shareholders for a cash injection, and we'll get onto the balance sheet in a little bit, after going to them for 141 million earlier in this year. He also said more job losses could follow, having already started a consultation to cut 450 staff and its pubs in 6 airports where trade has slowed to a trickle due to restrictions on travel. It also reduced head office staff numbers by 108. So we know that the profit side of it isn't great, and they're burning through cash, which isn't good when we look at the balance sheet in a few minutes. But as well as that, we're seeing more and more job losses. Obviously, when you think about like train stations and airports, there's definitely going to be more and more jobs cut there. Eventually, we could see the locations there. And also, we know what we talked about earlier, the pub situation. Obviously, you got the 10 p.m. curfews, and also with the 10 p.m. curfews, you kind of got these, pubs shutting if it gets bad cases in that area, which isn't good. So it seems like, it's still not totally out of the woods. This is going to carry on. There could be more and more losses, and obviously in this earnings we had things where it wasn't the 10 p.m. curfew, and we only got that the last few weeks. So if that carries on, potentially the losses and the revenue could be even less than what this is in the next period, which is definitely not a great thing right now with the company going forward. And also we did get the information about they're probably going to need more cash to raise, and like I say, the balance sheet we'll see about in a second. And just a note on the actual management itself. The management itself, I don't think has covered itself totally in glory over the last few months. Obviously, I'm not a huge fan of the management right now, because I always thought they were very too outspoken politically, which is something that you don't want, and that's why they always catch the headlines, and why it also has a reputation that isn't exactly amazing. So I think that management kind of is one thing that I've always had a problem with in this company. I believe they have done quite a good job with the business. They're just a little bit too out there, in my opinion, and catch the headlines. We talk about Boohoo catching the headlines. Wetherspoons are probably in second place behind them. And also when we factor in that, that 10 p.m. curfew hasn't been there for ages, and probably after 10 p.m. is where Wetherspoons does still make really good money on, traditionally nights out. That's when a lot of people get carried away. There'll be a lot of drinks going in. There'll be a lot of shots that probably get put through there after a night time, and also the limited space as well. So the outlook is probably going to be even worse for Wetherspoons going ahead. And I don't know how much the 20% drop factored that in right now. So historically on the growth side of it, we can see the company has always kind of done well on profit side of it. It's kind of slowly grown it, and same on the revenue side. Historically this is a company that's done quite well on revenue and profit, and that's why the share price has followed it. Now, we did hear about the cash being raised in Wetherspoons, and we can see that this is probably quite an ugly balance sheet. 331% debt to equity, which is not great. We look at the cash, 174 million compared to a debt of 1.1 billion. So the cash to debt is quite ugly. You'd hope if the debt was that much, they would have about 500 in cash, and they haven't. And this is why they're having to raise cash, because the company wasn't in a solid position balance sheet wise going into the COVID situation. Which, once again, you have to look at the management team and go, why weren't you having a better cash position than that going into the COVID situation? And just to have a look on the insider front, I always like seeing what's happening with the shareholders, and if they're confident they can make it through it and they're going to be in a good position. Normally see a lot of management buying shares in the current situation, but really everything's been overshadowed because Tim Martin, once again, the chairman, has been here selling a lot of shares, 5 million worth of shares. And to be fair, like, Tim Martin has just gone back on full pay in the current situation. Like, I don't know why he's selling this amount of shares, because he's on full pay. It's not like he needs the money. So I think that's kind of like put a dampener on that you see on the 10th of July, the actual chairman actually selling so many shares. I think that's a big negative right now. So overall, I see Wetherspoons getting through the situation, and I believe the share price will go up from here. And like I say, when everything gets back to normal, it will be a company growing revenue, it will grow profit. But I'd probably say there's about an 80% upside on this one. But when I look at the management, what's going on, and the balance sheet that's there, I think looking at other companies that are out there, your Boohoo's, your Hollywood Bowls, for example, and there's plenty more out there, would your money be best suited in this company or some other companies that are out there? And in my personal opinion, I think there's some better companies to invest out there than what JD Wetherspoons is right now. Saying that though, I don't think it's an awful company, and I do believe that there is some share price gain in here. And like I say, I think there's probably 8% upside from here over the 2 to 5 year period. So I do believe that if you bought this stock, you would see some share price gain. But for me, I just think the balance sheet is a little bit too much. I'm not a huge fan of the management team in this one. And like I say, when I think about risk to reward, and when I look at elsewhere at other companies, especially with the current situation that we had in Boohoo, I'm looking now and thinking, is this the best place to put my money? And I don't think so. So overall, I have to say, with the dip, I would say that it is, I would rate it a buy, but personally I won't buy because I believe there's better opportunities out there. So I hope that was useful for you guys that were after some Wetherspoons news. So I hope you enjoyed it. If you are new around here, subscribe. As always, if you smash the like button, that'll be absolutely amazing. And I'll see you in the next video.